Oh my God. What? Well, I sure did it, didn't I? I was just talking to nobody here. I swear to God, I hit go live and I don't know. What am I doing here? My gosh. Yeah. I got my phone there, luckily. And I've just been talking to nobody apparently for a couple minutes. And all of a sudden I look at my phone. I'm like, why is it still showing why is it Why is it not doing it now? There we go. Christ almighty. I told you guys a nice story. I did you know, let me rewind it and I said hello to everybody. I feel like a lunatic. I was just talking to the camera and nobody was watching. So, hey, all right. I worked today. A little bit tired. So, I was telling you all, I'll say it again. This feels like Groundhog Day. Well, let me go back. I made a joke. Um, I don't remember the first thing I said, but I said lights, camera, silence on the set, tape rolling. And then I said, how many of you people know what that's from? Some of you are too young, some of you are too old. And I said, 3, 2, 1, action. Welcome to the Church of Suicidal. We'll have a sermon and a wonderful recital. And then I said, yes, back in the day, I enjoyed myself some suicidal tendencies. And then I don't know. And then I asked what you guys were buying, spring cleaning. That's what it was. I said, while I was working, I hope you listen to the Dividend Talk podcast because European Dividend Growth Investor, EDGI, was talking about doing spring cleaning in his portfolio. Oh, what led into that? I know I'm trying to do a recap now. Is this sticker here? We're doing some spring cleaning and I found some old stickers. So apparently everybody, ladies and gentlemen, boys and girls, we're live at, I wanted to say live at 5 in the Dividend Dive because that would be too easy. So I guess we're going to have to change the time slot here. But this episode is brought to you by The Alley in Chicago. Whether they know it or not, they're presenting you this show. No, they're not. It's kind of like that. And nobody commented. I freaking said the video 2 weeks ago was brought to you by The Stuff, where enough is never enough. Fantastic horror movie, B movie from the 80s. So start over, take 2, right, Eddie? Let me say hello to everybody else. On this side, I feel like the biggest numbskull because I'm laughing, I'm making like I'm talking to you now, and then I looked at my phone. I'm like, what the hell is going on? So anyway, I guess I didn't hit go live. Anyway, so again, Shannon, CBB Cave, Steve, Pat, Whiskey Tango, Eddie, what's up? Yeah, share your hot stock if you want to. You know, we can talk about the market. We can talk tariffs, bond yields rising, right? That's a little bit crazy. That actually could turn out to be a good thing for REIT investors. I was reading UCS Scola, and in so many ways, he said if we start getting more aggressive rate cuts, well, that could drive people back into bonds or into REITs because REITs have been in a 3-year-long bear market, right? And you know, which a lot of us invest in REITs, they've gone nowhere except Agree Realty. Agree Realty's been pretty nice. So we can talk about that. I was going to show you guys what I'm buying. Tony, what is reality TV executive branch? Dude, I don't get that. I mean, if you're joshing with me, if you're yanking my chain, I don't mind it, but I don't get it. Maybe it's over my head. Maybe I shouldn't get it. All right, good. Everybody's here. You just showed up. Jason, you didn't miss anything. Jason, you missed myself thinking that I hit the little go live button. Apparently, I didn't click it hard enough. Dude, there you go. Well, we'd have to change it to Dividend Heaven. I mean, we called it the Dividend Dive. You know, Dividend Dive flows a lot nicer. I'm somebody that's fond of dive bars. I don't want to sound like a raging alcoholic, which I'm not, but dive bars have a special place in my heart because they used to be where you could get cheap booze, but nowadays they became trendy and it's, you know, anyway, make dive bars cheap again. I'm going to run on that. There you go. Yeah, I sure do, buddy. I hope to God I do. It's been 20, well, longer than that, 26 years that I've been doing this job, but I started learning to weld from shipyard workers, which, by the way, I think Huntington Ingalls, ticker HII. I believe that they were employed by them from Newport News. We weren't in the shipyard, but they were finishing up some stuff. So I was supposed to be doing Firewatch, and they were like, "Hey, let's get this 18-year-old, see if he can weld," and I couldn't. But uh, I was going to show you guys what I bought. I was going to kick it off with that. John, I didn't see what did we talk you off the cliff with? Oh, by the way, John, thank you. I think I must have said that the MLPX, the Global X MLP and Energy Infrastructure ETF, which essentially owns all the midstream companies that like Enterprise Products Partners, Williams Company, those types of businesses that they move the oil through their network of pipelines, they move natural gas, they are contracted to be insulated essentially from the price of oil. The price of oil doesn't affect them. Well, I mean, they're all intertwined, right? If oil goes sky high and people start buying less of it, then there's going to be less demand. But yeah, the dividends, I think I must have said, John, and I watched the video where I sold EPD and said I was buying MLPX. I didn't say they were qualified there, but I must have said it on a live stream. So those dividends are not qualified. They're ordinary dividends. You don't get a K1, and it's essentially the same thing as a REIT. So MLPX, that's why it's good to hold it in a retirement account, because the dividends are not qualified, but you don't have to deal with the K1. So yeah, that was my wife used to tease me about that when I first started this thing. She's like, "You should do just do topless investing." And I said, nah, I think that's not gonna go the way that a red-blooded male would think it would go. But it's gonna go the other way, you know. Um, oh, I see what you mean, Tony, with yeah, and dude, this is why I don't try to predict markets. I don't know how you guys felt when the market just went haywire on Wednesday. I thought I thought my phone glitched. It's funny because I bought a share of Nextstar at 144, which I'll share with you here in a minute. Let's put this up. There we go. This is what I was trying to share earlier, and I realized you all weren't. I got to click on this. There we go. So I realized you all were not with me, and I was talking to myself. Not a song. Anyway, yeah, I shared a little story about, free newsletter. By the way, you can sign up for it, dapperdividends.com. You'll see a little pop up. But I shared what would happen if, here we go, you missed the best days in the market. I was reminded of the big down days that my mom panic sold back in 08, 09. I didn't know enough about investing to tell her, well, look at the chart, right? I told her, though, but if you sell, you're going to lock in your losses. How are you going to know when to get back in? She got back in later when it was a lot higher than where she sold. So she learned a lesson. But yeah, she just said, I can't take it watching my portfolio every day, every week. It's just going down and down and down, and my money's evaporating. But if you missed the 10 best days over a 20-year period from 2003 to 2022, you'd have a lot less money. So anyway, I shared all that. And I think a lot of you have heard that before, but I thought maybe somebody out there might not. No dividends this week. I did sell 4 shares of Visa. I'm trimming that I want to get to that allocation quicker of our overall investment net worth of 85% funds and 15% individual stocks. Right now we're at about 75-25. Got some work to do. We're up 21% on Visa. I had 39 shares in the Roth, so I only sold 4, trimmed back a little bit, put that into more VTI, average price 4 shares of 257, one more MLPX at 56, 16 SCHD at 24.75. So I was actually averaging down on a few shares of SCHD. That share of Nextstar at 144, two more Starbucks at 77.98, and I want to get to 200 of Hero Incorporated. That's going to be my coffee can stock to hold. It doesn't pay a dividend, so there's that. That's what I bought. And yeah, David, that's a good point, man. So there will be a mix of return of capital in that too. It's not all return of capital. And I know we like to bag on the yield max funds, but I think those are more designed for a heavier return of capital, because I think they need more people in the fund, because then they make more money. So yeah, that's a great one. Is there a qualified midstream transport stocks? I'm probably going to guess not, because by their nature, right, they're master limited partnerships, and MLPX is a way that you can invest in them if you don't want to deal with the K1, if you don't want to get that K1, right? So Global X takes care of the, I don't know how to explain it, but I don't, wonderful job. Yeah. So MLPX, I imagine it going through like the ringer. I don't know. That's a bad way to put it. But anyway, you don't get a K1 with MLPX, and it's a way you can invest in a basket, almost all of the big midstream, North American midstream companies. So, wait, who lost? I don't know, Michael. I hope it's not me on this end. When I see you guys say I lost you, I get freaked out. But yeah, we can, let me see what you guys bought, and then we'll talk what might happen again, why REITs might benefit from, if China, I don't know, do you guys think China's dumping bonds as a retaliatory measure? So Matt, you bought Realty Income, there you go, SCHD, Lowe's, Broadcom, and NextEra Energy. Yeah, NextEra Energy, that's one that comes up on a lot of them. So yeah, that's a problem we all have. And it's hard. It's hard because I know that they, I don't know. So I was already reading Frank's. Oh, there you go, the capital. There are studies that are done that show that the lump sum investing beats out dollar cost averaging, just because the market has that tendency. It has that upward bias. So we don't know when, but if you get the money in and working quicker. So, oh, you closed Visa and locked in the capital appreciation. Yeah, it feels a little overvalued. And again, it's in the Roth, so there was no tax anything. I really didn't expect it to move up that quick. We were buying it in the 260s and 280s in that range. And I mean, it just took off right after the election. Oh, by the way, did you guys see that news that the electronics companies are going to be exempted from the tariffs? So there you go, chips and cell phones, and for how long? I don't know. Who knows? So Frank, you and I both sold a little Visa. Interesting. A bank incentive, then I'm buying more SCHD. I'm going to guess that's interest, right? John, you're selling Walmart. Crazy that they shot up so much. What do we got? 104? No, 140, right? Is that what I last saw? I can't keep track how fast this is moving. 140% tariff on Chinese goods. Dude, that's going to hurt companies like Five Below. Most of their stuff is from China. That's going to crush them, that they're a low cost discount store that prides themselves on having low prices. Well, they would be 10 below, right? Or more. Everything would have to double overnight for at least things coming in. But sold some Walmart, but yeah, they got a lot of, yeah, I don't know. We'll see, John, what happens with that. John, I wonder if I haven't really looked at Lincoln Electric. I do use their welding rod. I have them on the watch list, but my guess would be that so the 10-year, right, it jumped. The 10-year yield rose a lot, which makes long-term borrowing more expensive. So if it's going to be more expensive right now to finance things, then I think the market is thinking that there's not going to be a lot of construction going on, or there will be less construction. It's not favorable to borrow and finance construction projects, right, when the rates are high. And from what I understand, somebody correct me if I'm wrong, but the so when the Federal Reserve cuts rates, that's the Fed funds rate, right? Like that's the overnight borrowing rate. I think I heard it put where the banks, that's what that affects banks and loans they make. But the 10-year treasury, that yield is long term. So the Fed is like short term borrowing, but the 10-year treasury yield is long-term borrowing. So that has been climbing and climbing, and there's no concrete proof yet, but a lot of analysts think that China is dumping their tariff or their tariffs. No, they're dumping the treasuries that they hold, which is what, 3 trillion or something. And yeah, so that is going to create a ripple effect. And mortgages, I think, trade about 1.5 to 2% over the 10-year. So with the 10-year going up, that's pushing mortgage rates up. So they're kind of doing damage if that is what's happening. It's really crazy to watch this play out. And I'm learning a lot that China could be damaging the long-term economy by just dumping their treasuries, just getting rid of them. And then the Fed might have to step in and buy them up, right? They'll just print money, and that's going to create it. I don't think it's good. I mean, this is, yeah, I don't know, John. I haven't looked into Lincoln Electric that deep, but most countries here do. I think the number is that 40% of the input that goes into our our exports, we import it. So what companies are sourcing to make and then export, or even keep here, I guess, just 40%, I think, of their production cost comes from China. So, it's crazy, man. It's like these two companies, they are powerhouses and we are linked. And, I don't know. We don't need to get into an economic discussion. We can if you guys like, but Hess Midstream, right? Oh, HESM, Rust. So you're saying that they have qualified dividends? HESM does. If so, that is awesome. If you can read, I missed that, man. Some of these I got to, Sobo's a pipeline company, almost yielding 9%. Interesting. Yeah, Michael, I know you're big on Pfizer, man. Dude, they got all the pharmaceutical companies got smacked. I think Pfizer's at a 20, I want to say 2011, 2012. It was earlier in the week where they were trading at, but they've all recovered a little bit. AbbVie got beaten down. They all got beaten down because he wants to. Honestly, guys, I don't know. Maybe you can explain it to me, but it feels to me like President Trump wants everything that's sold or everything that's bought in America to be sourced and manufactured in America, which is crazy. We need global trade. Literally is basic economics that there are other areas of the world that can make things much more cheaply than we can, or not even at all, like cocoa. I mean, we don't grow cocoa here. From what I understand, it's a reason. There's a reason. So what are we supposed to do? Not figure out a way to grow cocoa here, which would be crazy expensive because you'd have to build greenhouses. But anyway, to tangents this guy goes on, right? But yeah, man, I don't know. I'll let you and Ian Lopik have Pfizer, but yeah, highs at 62 and 22. It doesn't mean they're going to go back. And what worries me about Pfizer is that they can't sustain after the vaccine stuff started going away. I don't know if it ever went away, but it's not a hot commodity like it was. And they just took a hit. Plus they bought, I can't remember the name of the company they bought. They made an acquisition. A lot of people think they might have overpaid. So we'll see, man. I might be wrong, but I'll just I'll be happy having Pfizer exposure inside of SCHD. I think it's one of the top 10 holdings, right? Oh, incentive is a reward for open. Is that what you're doing, Alan? Are you just running around opening up all these accounts? Isn't that when they used to give you a toaster or a t-shirt and then the rewards got less and less, right? I don't even think you get a pen now. And we will do news. Don't worry. Don't you worry, your pretty little heads, because we want to tell you what William Black bought was a CHD along with me, Chevron, Main Street Capital. You're buying them up. BKH, it's ringing a bell. Is that, oh, what is BKH and SCHY? Let me know BKH. I can't think of it. Jim. Cheers, Jim. What's that? What is this noises this guy makes? My tea isn't warm enough. I think I was going to say something, and then I was getting ready to drink my tea. I didn't somehow. Anyway, Jim, you bought Verizon. What are you thinking about Verizon? Do any of you guys listen to the Compound and Friends with Downtown Josh Brown and Michael Batnick? They had, I don't remember her name. They had a woman on who wrote a book about dividend investing, and she was pushing Verizon, and they were kind of, or Josh Brown was teasing her on it, said, yeah, they pay stable dividends all the way down. So Tyson Enterprise Products and JCI, is that Johnson Controls? Open a position in NTR. We'll look at them. Can I call you Jimbo? Is it wrong? Let me take a few of these. We'll do news. Jim's NTR. Oh, good. Thanks. Yeah. 10-year affects mortgage rates. All right, good. Yeah. And again, hey, I'm just a welder that loves learning, reading, self-educating, trying to improve. And yeah, so basically China can F with our economy by just dumping the treasuries, right? And then what does that do to the rest of the world? The rest of the world is like, well, if China's dumping them, I don't know, guys. I just hope that, I don't know. I don't know how it's going to turn out. We have very little control over it as individuals. What can we control? We can control where we put our money and what we think in our mind and what we do with our bodies, right? That's at the end of the day, that's really all we have control over, unless you are the president and your decisions can move markets and economies. Yeah, good. Thanks. And, trying to, for the Sharpie thing. I don't know the Sharpie thing. Yeah, I know. Yeah, Ian, I don't know, guys. Like I said, that yield looks nice. Maybe we'll take a peek at Pfizer too, just for the fun of it, because we can. Really? I could have swore it was an SCHD. Well, everybody, that's fake news if it's not. I do apologize. Oh, dude, you're right. And that just happened too. Like, if I was on a live stream talking about it, but you know what? Hey, like I said, it's been a long day for Daddy, and it's at the end of my night here. But I get pumped up to talk to you guys. So this is like my last shot of energy. But and then Michael, TPL, is that Texas Pacific? I think we've seen them a bit. All right, let me get caught up here. I'm almost live. Almost live. Oh, Black Hills Corporation. Yeah, that's right. And they're a dividend king, right? Yeah, as I just read Dividend King. Yeah, really boring, and they're probably good for somebody that's retired, right? Capital One, $300 incentive, make 2 qualifying direct deposits of $500 or more. Hey, there you go. Free money there. See, this is what I love, man. I love you guys because, yeah, if any of you know anything deeper about Pfizer than I do, because I don't know, I looked a little bit a while ago and I was like, nah, it's not for me. But you say they have nothing going now or in its pipeline for about 5 years, right? And that's why they bought, which the company I can't remember. Yeah, that's pretty good, man. The long-term story. I don't remember what we were talking about, David. What the long-term the long-term story for which? All right, here we go. So we will do. Oh my god, dude. So Paxlovid is around 1,400. Well, weren't they getting kickbacks from the government, right, to make it keep it cheaper, something like that? But yeah, Michael Anthony, who is apparently not the bass player from the former bass player from Van Halen. All right, let's do this, guys. Let's jump over to news and then we'll look up a couple of these stocks, which I've been told I say wrong. Apparently, it's stalks, right? Like a stalk of corn or something. It's probably not even right. All right, what are we doing here? We're fooling around here. I got to let's pop it on. All right, what are we sharing? Oh, look at this. By the way, I was looking at some this is Nextstar. Nextstar Media Group. I had them on here and gosh dang it. I wish this setting used to be always like that. Now I have to change it. But with Nextstar, what was I going to show you? Oh, it's chopped sideways for a disgustingly long amount of time. Do weekly here. Yeah, since just going back till there we get a million pop-ups. I'm sorry. Anyway, this is what I wanted to show you. The institutional ownership is 98.14% for Nextstar. That means like pension funds, endowments, large insurance companies own 98% of the outstanding shares. So plus there's also 30.6 million shares outstanding right now. So that is, gosh dang it, I hit the wrong tab. So that is why it can move a lot. You'll see $20 price jumps up or down because the institutions control a large, and there's good and bad to that. We don't have to get into that. Oh, click. I gave this right. Now we're looking, everybody, at the futures. So, okay, well, slightly green, but you don't know what's going to happen. So let's go to SimpliSafe Dividends. All right, I guess we'll. Sorry, I'm back over here, and now I'm down here. And I guess we'll do the news. So let's see, where do we leave off before? April Fool's Day? No. Were we there? Yeah, April 7th is where we were. Nike got another dividend downgrade. So there you go. Wonder if I picked another winner. You guys can all point and laugh at me. Yeah, I shared on Blossom. I should have bought Casey. I got gas at a Casey's Friday night. And as I'm filling up, I looked at their stock chart and I was like, they're up 47% total return year to date, or in the past 1 year. Great. In that time, I was buying Nextstar down 6%, Nike down 38%. What else was I buying? It was Starbucks, like up 0.08% or something ridiculous. But a couple more. Microchip got a big dividend downgrade to 40 unsafe. So I don't invest in them, but dude, almost a 5% yield for Microchip. But their deteriorating business could be a concern if you invest in them. Big one there. Procter & Gamble raised the dividend 5%. Ian Lopik was all over social media with that one. Love it. You guys catch that short of him falling down the stairs over the Walmart box? I wonder why Walmart stock price has gone up. Like, oh, I tripped over a Walmart box. Tangier raised their dividend 6.4%. That's a retail outlet mall, REIT. They raised the 50, though, borderline safe. I think a couple more here. Polaris, leisure products. They make the jet ski or the, what do you call those things in the winter time, right? There's a joke that what was that joke? Don't let me forget. I got a good joke. The snow skis. Is it a snow ski? Snowmobile. Snow ski. Where are you from? It's a snowmobile. They make snowmobiles and stuff like that. but just stupidly high yield. And yeah, anyway, there you go. If you're a believer in Polaris, it may be a good time to buy them because they're $34 a share and they have an expected price of 98 to 119. So says them. Simply Safe. Last one here. Agree Realty raised the dividend 1.2%. So a little bit slower than they have been. Would have liked to see a little bit bigger. Really quick, we'll go through these because I love talking to all y'all and I don't want to spend every nutrient, fertilizer, and crop input. Jim, 41, borderline safe. Let's see why. I've never looked at this company, but slow dividend growth. Looks like they had a cut in there. Dividend growth, we can get all on one screen. Ugh. Yeah, they cut way before. Well, they rose through the pandemic, but they cut earlier. So yeah, don't like to see that. Slow growing dividend. They could be a little bit undervalued. If this is going fast, if for any reason you want to see this, just pause it. Right in the middle of their 52-week range. Let's see. Free cash flow payout ratio was a little bit high. So yeah, I don't know, Jim. Just from some of the early results are in that. I don't like the free cash flow per share coming down, being below where it was in 2019. I don't like that. So it looks very cyclical company. But if you're a believer, then buy when the cycle's down. They're still buying back shares, so that's good. Yeah, sales fell. Yeah, the margins have fallen. I don't know, man. There's got to be a reason why. Net debt's not too out of control. So Nutrient, I would pass on it, but hey, I invest in Nextstar, right? So your Pfizer was up next. They still get a 75 dividend safety score and a credit rating of A, but they're slow in oh my God, the yield is 8%. Yeek. Yikes. That's crazy. But they keep reaffirming the safety score. So let's see. The dividend, slow growth, slow and steady, right? 14-year growth. Yeah, I don't know, man. I wonder if this is a little bit of yield chasing. They raise it, 4 cents a year for a long time now? Yeah, it could be undervalued. How the mighty have fallen. Current price, $21. Oh my God. Look at that dividend yield is 7.85% when the 5-year average is 4.17% and just squarely buried at the low end of the 52-week range. Ugh. The free cash flow payout ratio is coming down, but it was over 100. That's right. Almost 200%. That's a big old bucket of yuck, everybody. Hello. You want to come and say hello to the audience? Why? We're talking about Pfizer. What do you know about Pfizer that you can share? Oh, come on. Anyway. See ya. It's my daughter, everybody. Free cash flow per share for Pfizer. Yuck. It's below where it was in 2015. You know what? That is just not reassuring. Okay, it's supposed to jump next year, but this is all a guess. That next 12 months. You know why? Nobody knows the future. That's why it's a guess. Sales growth. I don't know. This is just 5 billion shares outstanding. You know what? I don't know, man. I don't know them well enough, but just from the numbers, I would just rather invest in J&J. I mean, they have their own issues, but free cash flow margin's nice. And their net debt's not crazy, but I would steer clear of Pfizer. Yeah, let us know in the chat if you're buying them. But then TPL. Texas Pacific Land, that's right. $1,236 a share. That's because they probably have, I don't know, 5, 6, 8 million shares outstanding. Not a lot. But they think it could be overvalued. Wait for a pullback. They think Simply Safe does to somewhere 733 to 896. Let's see. When were they founded? 1888. Nice. They've been around a while. Oh my God. That's rocket ship dividend growth right there, everybody. 34% 10-year CAGR. Almost as Nextstar is almost as fast as that with the 10-year. But wow, they increased that dividend quite a bit. Yeah, this is probably going to look like a strong company. Let's see. Oh, they did a special dividend in July of 24. Yeah, but it looks overvalued. They've come up, I think on somebody else's. See, I don't think you use free cash flow payout ratio for them. I would have to verify that, but earnings payout ratio is usually better. Uh, just because of the nature of their business, so capital intensive. But let's see. This is cyclical. Well, okay. No, never mind. Belay my last. We're looking at earnings per share, which, by the way, some numbers I contacted Brian Bollinger, they're missing. So for that last 12 months, you don't see a number there. It'll show up on mobile, but not on desktop. So they're working on it. Something about numbers truncating or something. I don't know. But sales growth, yeah, hit or miss a little bit. 23 million shares outstanding. Not bad. Hey, Nextstar's got, 30.6, but someday it'll be that much, right? We would only hope. Yeah, total sales nice. Anyway, we'll move along this quick. Really good margins, and no net debt, and a whole ton of interest coverage. So there are those. So there you go, everybody. Sorry, I hate being away from you guys for so long. I wish there was a better way I could do that. The tariffs on France will start World War III as USA does not produce champagne. It has to be imported. Well, there you go. I don't know. I guess we're just supposed to produce everything here, right? Just produce it all here. All right, let's see what else you guys said. Yeah, it does have a high debt level, but and this is something I'm trying to understand because their industry traditionally does have higher debt levels, but Liang Liha, their CFO, says they have a clean balance sheet that they would be able to pay it off much faster, but they have low interest on the debt. And with the stock trading at a 20% plus free cash flow yield, they're getting an instant 20% return by buying back stock. Whereas if they pay off something that's whatever, like 3-4% interest, you're getting a 4%, 3% return. So it's more beneficial to the company and the shareholders for them to buy back stock at such a high free cash flow yield. And she even runs a scenario where if you compare Nextstar to Paramount, I think, and Warner Brothers Discovery, going off metrics that recent analysts had used to give them a price target, that Nextstar is in a better position, that they should be over 210, 220 a share, right around there. So, management wants to sell you, right? And that's the hard part, to separate, not falling in love with a company and just hook, line, and sinker everything management says. But yeah, so they do have a high debt level, but they can pay it off quicker if they wanted to. They're just choosing not to, is how I'm interpreting that. And yeah, it's like Josh Brown said with Verizon. Right now, I feel like that's awesome. I'm getting paid a nice dividend. So it keeps moving down. But honestly, I think because so many institutions, there's so much institutional ownership at almost 99%, that if they're not selling, the stock price isn't really going to move much. Right. So, let's see. All right, I'm catching up to you guys. Oh, Alaska calls them. Oh, my joke, right? Alaska calls them snow machines. All right, let me get caught up, and then I'll tell you the. Oh, they do call them snow machines, really? Yeah, snowmobile. This guy couldn't remember. What did I call them? Snow skis. Hey, watercraft. Ah, that's interesting, man. Yeah, Ski-Doo. I don't know who makes Ski-Doo, but if you guys believe in the company, could be an interesting time to pick up a few shares, but it could be rough for a while, Flowers Foods. Well, I don't know. I think we were going to buy Dave's Killer Bread, but it a little bit too much sugar added to it. Flowers Foods, everybody owns, right? Hostess. No, they own Tasty Cake. We're gonna have to look in it. We'll look. Hold on. Let me get. No, yeah, we'll do it right now. It's my show. We'll do whatever the hell I want to do. Right? Let me pull up. Let me go to the old Google machine and get Flowers Foods because we'll do this the fun way. Flowers Foods. Da, 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 da. Let me get to their website. Here we go. All right, let me share. So, John, I think they were okay. We'll look at the Simply Safe score, but I'm gonna have to change this. I got to figure out how to set this to do that all the time. So here we are, everybody. We've been whisked away to the land of Flowers Foods, and I just want to click on their brands. Oh, it was right there. Here's their family of brands. Got Nature's Own. There he is, Dave's Killer Bread. It's the #1 organic bread brand in the country. Some Canyon Blake House, gluten-free, Simple Mills. They own Wonder Bread. There it is, Tasty Cake. Favorite snack since 1914. Make America fat since 1914. Miss Freshly's, probably packed with all kinds of ingredients you can't pronounce. And you don't know if it's dangerous or perfectly normal. Anyway, Sunbeam Bread. This is too many. Captain John Durst's good old-fashioned bread. Well, it can't be that good old-fashioned. I've never heard of Captain John Durst. Oh, by the way, everybody, I was in a band called Captain John Durst. It was a cover band. Tribute to Molly Hatchet. Nah, I don't know. I can't even name a Molly Hatchet song. I'm sorry, Jim. All right, well, let me get through this. Butternut. Oh, they own Butternut. Jesus. I didn't think they own this many. I think what I was thinking of, Papa Pita. There you go. God dang it. I'm going to buy Flowers Foods because I want to run around and tell the world on Halloween, right? I can just dress like myself and tell everybody, hey, everybody, guess my costume. And when they can't, I'll say, dude, I own Papa Pita. Can't you tell? No, Papa Pita. That's it. Bubba's. Well, I guess I thought they owned Hostess. I guess not. Didn't Mars buy Hostess? I don't know what Bubba's Bagels. So there you go. Flowers Foods. Now, let's pop on. John, I'm just going to give you the Flowers card here because we got to move along. So there you go. Pause that if you want. 62 safe, slow dividend growth, and they look like they're undervalued with that dividend yield over 5%. It's so hard for me not to scroll down, but not going to do it. Not going to do it. Kevin, you did start flirting with Caterpillar. Well, I know that they were started in Peoria, Illinois, right? Or their headquarters is at least in Peoria. They have a museum you can visit. But, dude, you know as much as probably I do. If rates rise and it becomes really expensive to borrow, interest rates, right? I mean, I would imagine, especially with imports, construction is probably going to slow down. So yeah, TPL has zero debt. Yeah, I don't know. I'm solid. Honestly, Kevin, can you imagine a world without cat? I can't. So I think they're going to be around for a while. What would kill Caterpillar? They're everywhere. They're everywhere. There's started construction here in Chicago on the never-ending construction on the roads, and you'll always see Caterpillar machines over there. So TPL is extremely low capital investment. I did know that. Royalty company. Very interesting. Thank you for sharing. Yeah, I've never looked at them. So when I look at those, Simply Safe things, it's just quick. A quick look just at the numbers. The numbers don't tell the whole story, but it can give you an indication, right? William's only drinking champagne to be polite. Never been a champagne guy. I guess I have it once a year on what are people going to do on New Year's? Oh boy, there you go. I've had plenty of the champagne of beers. It's Tony, God bless you, my man. I wish to God I was selling calls on Nike, but the pickle I'm in is my average share price is like 76 and change. we'll just call it, we'll round down and call it $76. Current share price is somewhere in the low 50s. That means if I were to sell a call, I need to make sure I'm getting at least $76 a share. From 52 to 76, I probably get like $2 a share or $2 for the contract, or it just wouldn't be worth it, man. So, yeah. Oh, good. Yeah, my wife was at Costco and she was looking and she said, "Hey, Dave's Killer Bread's on sale or something." And I was like, "Yeah, let's get it." And she's like, "Hey, there's a lot of sugar." I was like, "Screw you, Dave, trying to get sugar in me." So we didn't get down with the Daves. Oh, well, I guess that's not a lot. Once again, fake news, right? Well, I guess it depends. 2 grams of sugar to an ant, it could drown in 2 grams of sugar, probably. So, isn't that funny? A bubble, a bubble bagel, Bubba's Bagels intervention. Jim, you have a fantastic memory. My daughter does own Caterpillar and she bought it. So if you guys are new around here, what we did when we got the stimulus funds, the stimmy checks, we didn't need that money, right? So I opened up custodial accounts for them and dumped it in there and then I gave them like 10 stocks to pick from. And Caterpillar was one of them. So my daughter, or I don't remember, she may have just asked because, shouldn't say cuz, right? That's lazy language. Because we had just gone to Caterpillar in Peoria. My wife used to live in Peoria, Illinois. So we would visit sometimes. But yeah, so she still owns Cat. And at one point, she was up like 130, 140%. My wife will never let me forget it because in the throes of the pandemic market crash, I was buying other things. And I remember I was working in Buffalo Grove, Illinois, buying some things, and we had some money. And I told her, I'm like, Caterpillar's at $90 a share. It might go lower. And she said kind of the same thing. She said, I can't imagine Caterpillar ever going away. Like it's going to be okay. We should buy a bunch. And by a bunch, I bought maybe like 4 or 5 shares. And what did I do? Well, when things started recovering, I sold them. I sold them at, I don't know, it's maybe right in the 120s. So, yeah, brilliant move. Should have just kept them and did nothing once again. So that's why, right? I think it's a fake study where they say that the people that died or forgot about their portfolios perform the best by not touching anything. Well, there's more to it than that. There's more to it. I didn't just sell Altria to buy Nike. Yes, some Altria funds went into Nike, but my wife and I decided that we wanted to sell out of Altria because we didn't want to directly own a company or not, directly, individually own a company that sells tobacco products. So her and I have both lost people close to us from tobacco use. And you know what? We just said, yeah, well, believe me, I know. I think I sold around 40, 44-ish, 45 maybe. And I look at where it is now, plus the dividends. I'm like, yeah, well, we made that, we just made the decision. So Douglas Harris, what's up, man? BXSL. Let's pop on. Let's take a look, man. I don't know what, it sounds familiar. Let's get the old screen share going. And I got to do this again. I'm going to figure this out. I don't have to keep changing that. BXSL, I feel like I've looked that up before. It's not ringing a bell. Oh, Blackstone Secured Lending Fund. Well, this is going to be a new one for me. Asset Management and Custody Bank. So this, I would need to do a lot of research into understanding this, but for what it's worth, says their dividend is borderline safe, 11% yield, looks reasonably valued. And let's just get a little more. Let's see what are the. No, it's not a lot. So they were formed in 2018. Obviously, Blackstone. They generate income and capital growth by investing in loans and securities of private U.S. companies. Oh, so that's interesting. But it also primarily deals with small and middle market firms. So this is almost like a BDC then, right? So I don't know how they differ from. Yeah, this sounds like it sounds like a BDC, but let's see what kind of dividend if it's qualified. Very slow dividend growth lately, but they did a quick raise. Sorry, I'm reading and talking. Looks like they could be reasonably valued, but that's interesting. It didn't show the dividend. Does anybody know what? Oh, wait, did I go buy it? Oh, here, non-qualified. So, it's, yeah, dividends paid by REITs and BDCs are mostly non-qualified. So it is a non-qualified dividend. I don't know, man. I don't really know anything about this. So their earnings payout ratio is getting up there, and it could be, yeah, and that might be from increased interest. And I don't know I don't know enough about it to speak intelligently about them. So, um, yeah, sales growth has been declining a little bit since 2019, but still up and to the right. They do some dilution. Let's see what their debt looks like, I guess. I wouldn't know if they're a BDC, then it's gonna, yeah. You know what? I don't know. I don't know if I don't know enough about it to tell you yes or no, but I am more familiar with Main Street Capital and Ares Capital, so I guess I would just rather go with them. Yeah, Meshinsky. I love the name, man. I told you I was a ski when I was born. So you guys think it's time to buy into Nike? Yeah. Hey, I want to say yes, but shows what I know. I thought it was, well, that's the risk, right? That's the risk you take investing in individual companies. Anything can happen. And on the last video, which by the way, Whiskey Tango, I'm glad you said something because I thought of it. John, I think you said, no, Steve, you said something too, where, yeah, I feared it might be a little clickbaity by just saying 24% yield, but I guess I wanted to maybe trick some people to maybe learning about free cash flow yield. So in my mind, clickbait is when you don't deliver on what was promised in the title or thumbnail. Like if I tell you, if I put on the thumbnail, hey, we're gonna dive deep into Dave's Killer Bread and do an expose on the sugar levels in Dave's bread. That'd be a really long, obscene title. But if that was the title and then you click on it and I'm like, hey, here's me at the beach, metal detecting. Look at the things I found metal detecting, right? That would be clickbait. So, but all the companies are going to be affected. Do you guys know the number? I want to say 70% of all the shoes made in the United States are from either Vietnam or China or Cambodia, I think. It's a lot. It's a lot. So yeah. Oh, Logan, good. Hey, we're going to get crowded on the pain train, right? But honestly, I'm going to give it time, with one of the caveats being we're doing some remodeling. We're converting a half bath into a full bath. We talked about it last week. So it's probably going to run somewhere around $5,000, and we've got some contractors we got quotes from, but I was thinking maybe, of course, when Nike was at like 68, just under 70, I was like, well, maybe I'll do a little tax loss harvest. We'll use that money to pay for the remodel. And then as I slowly repay ourselves back, which I am still doing for the VW Atlas we bought. And again, this is in our taxable account. This is extra money, right? Some people are like, you sold stock to buy a car? Yes, but the taxable account that we have at Schwab is after we max out the 401k, we max out the Roth, we save money every month for the both of my daughters' 529 college funds. We have a travel fund in a high yield savings account, and then we also have an emergency fund in a high yield savings account. What am I missing? We also contribute $50 a week to my wife's Roth. We just buy VTI every week, automatic. So essentially, after all of that, extra money goes into the taxable brokerage account where daddy's getting really good at thinking I'm spotting opportunities and losing money. Well, you don't lose till you sell. You get what I'm saying. But anyways, so that has been building up over the years, and we needed another car. So we sold stock, right? PepsiCo and J&J, which so far has been pretty good to buy it. Anyway, I got a spreadsheet, $200 a week. I pay back every week. It comes off that till we're paid back. So that's the long way of saying that I wanted to potentially use Nike to tax loss harvest, meaning that I can sell those shares for the lot, lock in that loss, offset any capital gains, dividends coming in, anything like that. But I can't buy Nike for 30 days. So I could start buying back in at that lower price, until something happens and then they shoot right back up, right? So anyway, that is potentially on the table. So don't freak out. Those 75 of you watching, someday this welder here, you might see him that he sold some Nike, and that's why. But other than that, it could be a little while. It could be a minute. A lot of volatility. It takes 3 to 5 years to set up onshore to set up a factory. Again, we talked about, I can't imagine Americans lining up around the block to make shoes and garments, and AI automation isn't to that point yet. You need a lot of manual dexterity to sew shoes together and clothing together, that automation, but this could light a fire under getting that automation going. So that's, yes. Justin's been looking at Deckers instead of Nike. Yeah. Hoka, right? Deckers owns Hoka. They're still, oh, hello. What? Why you get upset when I talk to you? So, why don't you get your piano and sing a song for everybody?
Bring that whole thing down here.
Sure, we can set it up. That's what we're gonna do. You can play. We'll sit you right here. You can play music on the piano. You can have like background music, right? We'll be like a piano lounge, and then I'll get to stream and talk to all these people, right?
Piano without the lounge. Where's the lounge?
This is the line. It's a dive. It's a dividend dive right now until 8:00. When I turn this off, then it's back to our downstairs. Anyway, you're distracting me, man.
You're distracting me.
All right, back to reality here, everybody. Yes, Oregon is the birthplace of Nike. Yeah, technically, they were blue ribbon shoes, though, right? Originally blue ribbon shoes, and they used to be. It was an animal. Not jaguar. I should have known. It's been a minute since I read Shoe Dog. I should know that, but all right, let me see. Joshing with my daughter. Thank you, Steve. I'm good. That does mean a lot. I don't want to be clickbait, but like I said, don't hate the player, hate the game. Sometimes it's just the way YouTube works. You have to be a little bit push the boundary, sometimes toe the line of clickbait. So yeah, I knew what I was doing, but Ian Merck, they had come down, Bill, right? Once upon a time, I owned Merck. I sold them in the high 90s, but dividends and how to pick up hot chicks. How to pick up chicks. Do you ever see that shirt? Oh, my joke. God. Okay, here it goes. So there's a guy that's going ice fishing. He's sitting on his bucket. He's drilling a hole in the ice, and he hears a voice that says, There's no fish under the ice. Thinks, the hell was that? Okay. So picks up the bucket and moves over a couple feet, starts drilling another hole in the ice, and he hears it again. There's no fish in the ice, under the ice. And then he looks and says, is that you, God? Says, no, I'm the rink manager. Get it? Old doofus was going ice fishing at a hockey rink, skating rink. That's just for you, buddy, because you're a Canadian. You may have all those Floridians fooled, but we all know that you're a snowbird. Or what do they call you when you're permanently down there? Are you just another Florida man? You're a Florida man in disguise. I know you, right? How does that feel? There's tension between Canada. Does it hurt, Craig? Anyway. Oh, you could tell it's a silly time. Oh, Adam, what's up? Adam, dude, what's up, man? It's always so nice to see you. And out there in Vegas, we'll be out there in October. Octubre. Hoka has low debt. Yeah, I haven't looked at Deckers in a minute, but ignorance is bliss. Are you referencing a face-to-face album, Dennis, or am I just being too... Yeah, no. Oh, you're right. It was Tiger Shoes. It was Tiger Shoes. Nike, they were Blue Ribbon, and then they eventually became Nike. Frank's been pouring on Merck. They should be. I won't pull them up, but they should be. Oh my God, I'm already over an hour. Let's see. MRK. I'll just give you the 90, very safe, but that dividend yield is 4%, which is way above the 5-year average. They have an A+ credit rating. And good joke. Yeah, I don't do jokes well, as you can tell. But there you go. You can tell it better your own way. All it is, guys trying to drill holes in a skating rink, and the voice tells them there's no fish under the ice. And blah, blah. Is that you, God? No, it's I'm the rink manager. Gil, Soundhound, I don't know. Vici, I know Soundhound, but I think they were a hot stock for a minute. And Vici, I'm probably going to buy more. If the Fed starts cutting rates and they go low enough, that's going to start pushing yield-hungry investors back into REITs. REITs have been in a bear market for 3 years now. It's been a long time that REITs have just been beaten up. And Vici, hey, Vegas isn't going anywhere. Vegas is a one-of-a-kind destination. Again, I just talked about us going to Vegas to see the When We Were Young concert, but there's no city comparable to Vegas. Can you think of one? Some people maybe Macau, I hear. There's gambling there, but honestly, Vegas is a one of one. So having prime real estate on an international one of one destination, I think is just going to be great. And again, as long as the casinos pay the rent, Vici's going to get paid triple net lease. The tenants take care of insurance, maintenance, all that stuff. So, Adam, yeah, I'm going to set something up. So you guys might not remember Jonah. He's plays in a symphonic power metal band. He was on one of the videos, and Tony, I'll look that up for you as I wind this down here. About Vici's last raise was, it was 4.2%. And their 5-year CAGR is 7.7%. Remember, they came out of the Caesars bankruptcy, so they really didn't earnest start until 2017, 2018, something like that. But yeah, and you're right, man. Vegas is it's a 101, right? We're going to be going to London. I hear it's kind of like the New York of Europe, right? So that's anyway, off track there with that, but so sad. Here, gotta go because it's Sunday night, man. And you know what? We don't know what's going to happen in the market this week. Could go up, could go down, could go sideways. Who knows what kind of crazy things are going to come out of Washington this week? But we do know that over many, many years that, we have to assume America's going to innovate, and the companies that are here are going to become more productive and become more valuable, right? So that should drive the market higher. But yeah, that's going to do it for us, guys. So thank you again. I really do appreciate this. I really do look forward to the time we spend together every Sunday night. I get energized from it, but I'm going to unwind. I hope you unwind. Don't take things too seriously. Remember, it's just, I don't know, it's just money. So I'll see you guys. Oh, next Sunday's Easter. I do plan on doing the live stream. So hopefully you'll join me, and it'll be my birthday on Sunday. My birthday's on Easter this year. So yay, 47 coming. All right, everybody. I'll see you in the next episode, live stream, whatever the hell we're doing here.